Today, we're diving deep into a really significant global issue, how China's responding to the recent U.S. tariffs.
That's right. You provided us with a rich collection of material from news articles tracking the immediate reactions to an official Chinese policy document outlining their position, alongside several, detailed economic
Right.
analyses.
Yeah, really good mix.
So our goal is to synthesize all of this and understand the multifaceted approach China is taking, what's driving their actions, and maybe what the potential broader implications could be for the global economy.
Okay, so let's start by setting the scene with the U.S. tariffs themselves, just briefly. As you know, in April 2025, the U.S. imposed a new round of trade tariffs.
Right.
Our sources indicate these actions stemmed from what were termed the America First Trade Policy and America First Investment Policy memorandums, accompanied by a report detailing the rationale. This included new, comprehensive tariffs on a wide range of Chinese products, with one source noting the inclusion of fentanyl-related goods as part of this move.
And what's particularly noteworthy, I think, is the announcement of reciprocal tariffs. This meant adding a substantial 50% to existing tariffs on certain goods.
Ouch.
Yeah. And the U.S. also floated the possibility of launching Section 301 investigations, which, just as a quick reminder, allow the U.S. to investigate and potentially take action against practices deemed unfair.
Right, the unfair trade slide.
Exactly. Specifically targeting China's maritime, logistics, and shipbuilding industries in this instance.
And the stated aims behind these U.S. tariffs, according to documents, were quite extensive.
Very broad. Yeah.
To reduce the U.S. trade deficit,
Yeah.
to encourage the return of manufacturing to the U.S., bolster national security, even trying to dissuade countries from moving away from the U.S. dollar,
Which is a big one.
alongside the more traditional goals of increasing government revenue to fund tax cuts and domestic programs.
So a whole laundry list of objectives there.
Right? The intentions were laid out pretty clearly. But what were the immediate consequences based on what we've seen in the sources?
Yeah, what actually happened?
Well, the picture that emerges is one of significant disruption. Reportedly, confidence in the U.S. economy saw a sharp decline, leading investors to sell off U.S. government debt. Interestingly, the Bank of England even issued a warning about a material increase in the risk to global growth and overall financial stability, directly linking this concern to the new tariffs.
Wow, okay, so immediate jitters globally.
Yeah, the term uncertainty seems to be a recurring theme in the initial analysis we saw.
And if we connect that to broader financial markets, there was increased speculation that the Bank of England might need to implement interest rate cuts to try and, support the UK economy against these potential global headwinds.
Makes sense.
The overarching sentiment from many commentators was pretty grim that these trade actions could result in no winner, with negative repercussions for the global economy as a whole.
The economic analyses we looked at really tried to quantify this potential damage.
Right, put some numbers on it.
Projections suggest a negative impact on U.S. GDP, with estimates ranging from about, say, minus about 0.7% to as much as minus 1.3% by 2030.
And somewhat even further long-term, right?
Yeah, some analyses even suggest that the longer-term losses could potentially reach up to 8%. And it wasn't just GDP. Wages in the U.S. are predicted to decline, both short and long-term, and consumer spending expected to decrease too.
Which also brings up that critical question about international capital flows.
Yeah.
The economic models indicated a likely decrease,
Right.
along with reduced demand for U.S. treasuries. That's a significant point, especially given current U.S. national debt levels.
Definitely.
We even saw projections of potential lifetime financial losses for middle-income U.S. households. One estimate was around $58,000.
Oof. And for consumers directly.
Yeah, the Consumer Price Index projected to increase perhaps by around 1.2%, so hitting people's wallets.
Okay, but here's a really interesting, maybe unexpected outcome highlighted in the analysis. Go on.
While U.S.-China trade might shrink, many other countries could actually see their trade deficits with China widen.
How so?
Because Chinese exports get redirected, right? Away from the U.S. tariffs, towards other markets. It just shows how interconnected everything is.
Yeah, trade flows like water, finds a new path. Okay, so that's the initial landscape after the U.S. tariffs. Now, let's really dig into the main focus, how China is responding.
Right. 80% of our time here, what are they doing?
Okay, the official Chinese policy document we have is quite direct. It speaks of taking forceful countermeasures and necessary countermeasures.
Strong language.
It is. And it's important to note this is consistently framed as being within international law, a necessary defense of their national interests against these U.S. tariffs and what they see as broader containment policies.
Okay, the official stance. But beyond that, what specific economic actions are they taking or, being advised to take?
Well, a really prominent theme, especially from the Chinese economists cited in our sources, is a huge emphasis on strengthening domestic demand, boosting their own internal economy.
Exactly. They've identified what one economist called the two elephants in the room, hindering growth: the financial difficulties of many local governments and the ongoing slump in the real estate sector.
Right, tackling those is seen as key.
Let's delve into these two elephants, starting with local government finances. It looks like China has already ramped up the issuance of local special bonds quite a bit, something like 4.4 trillion yuan this year.
Okay.
And what's interesting is how this money can be used has been expanded. It now specifically includes ensuring the three guarantees, basically covering living standards, wages, essential operations, and also for buying land and housing.
Got it. So shoring up the basics and intervening in property.
But some economists are saying even that's not enough. There's a proposal to substantially increase local debt, maybe another 4 to 5 trillion yuan over a few years,
Wow.
specifically aimed at supporting those three guarantees. The idea is, ensure salaries get paid, settle debts with small businesses, and that directly injects capital and hopefully stimulates demand quickly.
Makes sense. Get money flowing. One analysis mentioned private investment growth was near zero last year, partly because of these local government arrears causing uncertainty.
Exactly. Now, the second elephant: real estate. Our sources consistently say the sector's still declining, and that has ripple effects.
Yeah, it's not just buying houses.
Right. It hits related industries like home decoration, furniture, big consumer spending areas. One economist pointed out that local government and real estate spending combined is roughly half of China's total domestic demand.
Half. That's huge. Its performance is critical then.
Absolutely. And there seems to be a bit of a strategic split in how local governments are using those special bonds we mentioned.
Oh.
They seem more willing to use funds for land acquisition, but more hesitant to buy actual housing.
Why is that?
Well, the thinking seems to be land value is more stable, whereas house prices might still fall in some areas. Plus, local governments are under pressure to reduce their own debt, so they're wary of taking on more debt for potentially depreciating assets like houses.
Tricky situation for them.
Which leads to this really interesting, kind of bold proposal for the central government to step in, create a national team.
A national team. Like state-backed?
Could be, yeah. A new entity or an existing one, specifically tasked with buying housing in major cities.
And the scale.
Estimated cost around 2 trillion yuan, aiming to buy maybe 600,000 to 700,000 homes.
It's a lot of houses.
It is. And the main goal isn't just providing housing, it's more about sending a strong signal of confidence to the market, stabilizing price expectations, kind of like intervening in the stock market is the analogy used.
Right. Manage expectations, boost demand that way.
Precisely.
Okay, beyond these big interventions, there's also talk about income distribution, right?
Yes, a strong focus there too.
Yeah.
Advice from economists is to deepen reforms of the public finance system, make sure a larger share of national income goes to residents, and also equalize access to basic public services across regions and between urban and rural areas.
Which, logically, if people have more disposable income and feel more secure about services like healthcare, education.
They're more likely to spend. Yeah. This also connects to broader institutional reforms being suggested, like overhauling the rural land system and the household registration, the hukou system.
Longer-term plays to unlock consumption potential.
Exactly. The underlying idea seems to be reallocating public resources to better support livelihoods, especially for lower income groups, to raise both their actual income and their expected future income.
And there was even mention of more direct stimulus.
Yeah, the idea of increasing national debt to fund direct consumption subsidies, like giving people money specifically to spend during holidays or subsidizing certain purchases, a more immediate shot in the arm.
Get people opening their wallets now.
And it's not just huge policy shifts. Economists also suggest fine-tuning existing rules, maybe lifting remaining purchase restrictions on real estate in big cities, relaxing rules on things like keeping older motorcycles, looking at all the levers, basically.
Okay, so a big push on the domestic front. Now, shifting focus slightly. It's interesting that even before these latest tariffs, China was apparently supporting its companies importing from the U.S.
That's right, based on market needs and WTO rules. Though it's important to remember those specific purchase commitments from the earlier trade deal expired end of 2021.
Right.
But there was a system where certain U.S. products could get exempted from some of the earlier Chinese retaliatory tariffs if domestic companies applied for it.
So some trade was still facilitated.
Yeah, we saw examples in energy, oil, gas, coal imports from the U.S. increase significantly in 2020 and 2021. Shows that even with tensions, mechanisms existed for specific needs-based trade.
Okay. Now, another really key element in China's response, heavily emphasized in their official documents, intellectual property rights.
Yes, IP protection. This is partly about fulfilling past agreements, but also, recognizing how crucial strong IP is for their own innovation and tech progress.
And they seem quite detailed about their efforts.
Very detailed. We're talking new Supreme People's Court regulations, criminal law amendments to protect business secrets better, improving pharma IP protection via patent law changes, early dispute resolution, even patent term extensions.
So, legal frameworks being strengthened.
And clamping down on online infringement, too, through court decisions and copyright law updates.
Is there evidence of enforcement?
Well, the policy document cites some pretty big numbers for 2024. Hundreds of thousands of IP infringement cases investigated, tens of millions of counterfeit goods seized by customs. It suggests a real effort on enforcement.
And what about that recurring issue of forced technology transfer?
They address it directly. The policy document highlights legal prohibitions against it in their foreign investment law and administrative license law.
So, legally banned.
Yes. And they also emphasize strengthened confidentiality rules for administrative departments regarding foreign investors' business secrets.
And their broader argument
Is that by widening market access via the negative list system and ensuring equal treatment, they're creating a better environment for voluntary tech cooperation, not forced transfers, making it more attractive to partner willingly.
Okay. Another crucial piece seems to be the exchange rate, the RMB.
Absolutely. Maintaining a stable renminbi is key. They keep reiterating their commitment to a managed floating exchange rate system. Meaning the value is mainly set by market supply and demand, but the central bank intervenes to manage volatility, and it's referenced against a basket of currencies. Crucially, they explicitly say they're not doing competitive devaluation, deliberately weakening the currency for a trade advantage.
And they've been making changes to this system.
Yeah, progressively refining the market-based mechanisms, expanding the daily trading band, making the central parity rate more market-driven. Plus, their foreign exchange market itself is developing more tradable currencies, higher trading volume.
And transparency.
They stress that, emphasizing clear public policy statements, publishing data and reports regularly. They often point to the RMB's overall stability and its role as an automatic stabilizer as proof the system works.
Okay, so that covers a lot of the economic levers. What about the diplomatic strategy? That's got to be a big part of their response, too.
Definitely. A central theme consistently stated is their commitment to resolving disputes through dialogue and consultation. They frequently point to the various rounds of talks held with the U.S. as evidence.
Keep talking, basically.
Right. And another fundamental pillar is safeguarding multilateralism. They constantly highlight respect for international consensus and upholding their WTO obligations.
Which contrasts with their view of U.S. actions.
Exactly. Unsurprisingly, their official statements strongly criticize what they see as U.S. unilateralism and protectionism. They argue these actions disrupt global supply chains, undermine free trade rules, and ultimately harm global economic development.
And they push back on the idea that the trade relationship is one-sided.
Very much so. They consistently frame the China-U.S. economic relationship as mutually beneficial, win-win. They acknowledge the goods trade imbalance, but argue if you factor in services trade and local sales of companies in each other's markets, the benefits look much more balanced.
Do they offer proof for that?
Well, they sometimes reference reports like from the U.S.-China Business Council, highlighting the significant number of U.S. jobs supported by exports to China. It's a way to emphasize the interdependence.
And the WTO dispute.
Ah, yes, they bring that up too. The case China initiated over earlier U.S. tariffs. They emphasize the WTO panel ruled in their favor, finding the U.S. tariffs violated WTO rules.
But the ruling didn't really change anything, did it?
Well, they also point to the paralysis of the WTO's appellate body, largely due to U.S. obstruction, as a major problem for the whole multilateral trading system's effectiveness.
Right. Okay, we touched on internal policies under economics, but maybe let's specifically look at efforts to improve the overall business environment.
Good idea. This is presented as an ongoing, long-term priority, not just a reaction to tariffs.
The core idea being?
Letting market forces play the decisive role in allocating resources, with the government creating a supportive framework. ensuring equal access to production factors for everyone's state-owned, private, foreign, and fostering fair competition.
And foreign investment specifically.
They point to the expanding market access via the negative list and the foreign investment law, emphasizing equal treatment, the ban on forced tech transfer, and stronger IP protection, as we discussed.
And specific concerns like taxes.
They address that too, clarifying that domestic and foreign firms operate under the same tax laws, explaining the rationale for VAT and consumption taxes on imports as consistent with international norms, and emphasizing equal treatment under individual income tax laws for Chinese nationals and foreign workers.
Okay, so internal reforms continue. Now, looking outwards again, China's position in global trade in this new tariff environment, what are the potential shifts?
Our sources suggest a potential trend: Chinese producers increasingly looking beyond the U.S. market.
Redirecting exports.
Exactly. Regions like the EU, Canada, Mexico are mentioned as potential destinations. This could really reshape global trade flows, and as we mentioned earlier, might widen trade deficits with China for some of those other countries.
Interesting. And the flip side.
Well, there's an argument that if China succeeds in boosting its domestic consumption significantly, that could actually help fill a global demand gap, potentially created by U.S. protectionism.
Creating opportunities elsewhere.
Potentially, yeah.
Yeah.
Offering new market opportunities for businesses in other parts of the world.
And there was that hint of a 230 strategy.
Yeah, some analysis mentioned that. It could involve an accelerated opening up of the Chinese market, specifically to countries outside the U.S., maybe lower tariffs, fewer market access restrictions for them, a kind of strategic pivot.
Right, strengthening ties elsewhere. Okay, finally, let's think about the long-term consequences as China sees them.
Well, they clearly view the U.S. actions as having already done serious damage to the bilateral relationship and economic ties, disrupting trade, investment, and undermining the basis of that Phase 1 deal.
And the impact on the global system.
They see the U.S. tariffs as a direct violation of core WTO principles, MFN treatment, bound tariffs, so damaging the entire multilateral trading system.
Is there concern the U.S. might pull back further from the WTO?
There's analysis suggesting that possibility. A U.S. exit or further disengagement could leave other proponents of multilateralism more isolated, facing bigger challenges in global trade governance.
But from China's internal perspective, is there an upside to this pressure?
That's a key argument. They contend that this external pressure actually reinforces the need to intensify their own domestic rebalancing policies.
A catalyst for change they wanted anyway.
Sort of. They see focusing inward as crucial for their high-quality development, benefiting their population, and ultimately strengthening China's competitive position globally in the long run, pushing them harder down a path they were already heading.
Okay, so to wrap it all up, what we're seeing is a really comprehensive, multi-pronged response from China.
Absolutely. It's much more than just tit-for-tat tariffs. It involves a strong focus on boosting their internal economy, particularly domestic demand.
Right, the domestic focus is huge.
Continued strategic diplomacy, emphasizing dialogue and multilateralism, while criticizing U.S. actions, ongoing internal reforms on business environment and IP.
A potential strategic shift in global trade patterns.
And this long-term view that the challenges actually necessitate and accelerate their own strategic domestic adjustments, it's a whole package.
They clearly see the U.S. actions as damaging, both to the relationship and the global order, but their response seems very determined, very comprehensive, adapting, resisting pressure, and sticking to their long-term goals.
Which really leads to a fascinating closing thought for our listeners. Considering the scale and the sheer complexity of China's response that we've mapped out, what are the potential long-term transformations, maybe even accelerations, in the global economic and political landscape that these ongoing trade tensions might trigger? What completely new opportunities or maybe significant challenges might pop up for other nations around the world as a direct result of all this?
A lot to think about there. Definitely a complex picture, no easy answers. Something to keep a close eye on.